Would you like to earn market-smashing passive dividend income? Want to earn this dividend income from utility companies that profit from the innate need for electricity? Want to buy shares in high-quality utility companies while they're still trading near their 52-week lows? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
While the stock market has rebounded nicely from its March 23rd low, we have to keep something in mind. The stock market is a market of stocks. The S&P 500 is made up of roughly 500 different stocks, and each stock represents equity in a specific business, with each business sporting unique dynamics. Indeed, some individual stocks in the S&P 500 are still trading near their 52-week lows, either because they never rebounded in the first place or because they dropped in price again. Pundits will tell you how expensive the market is, but that doesn't have anything to do with the valuation of individual stocks. Valuation has to be looked at on a case-by-case basis. I want to reveal to you two high-quality utility dividend stocks that are still trading near their 52-week lows. These stocks could represent incredible long-term value. Meanwhile, the combination of these two stocks gets you a yield of over 4%. That's more than twice the yield of that expensive market. Utility stocks are great for dividend growth investors because you're basically investing in local monopolies that are providing a service that people quite literally can't live without. It's money in the bank. Now, I want to quickly mention something. I started preparing for this video on Sunday, June 28th. I'm shooting this video on Tuesday, June 30th. Unfortunately, both of these stocks had a pretty big pop on Monday, June 29th. That's how it goes sometimes. Stocks go up and down every day. But both of these stocks still look like great long-term opportunities for dividend growth investors. Let's dig in. The first stock I want to highlight is Vista Corp, stock ticker AVA. Founded in 1889, Vista is a utility company that provides electricity to nearly 340,000 customers and natural gas to about 300,000 customers across 30,000 square miles and 4 northwestern states: Montana, Idaho, Oregon, and Washington. What's particularly interesting about Vista is the makeup of their electricity generation mix. In an age where clean energy is all the rage and companies left and right are trying to refashion their business models, Vista has already stepped up to the plate. Approximately 51% of their electricity generation comes from hydro. That puts them in a pretty enviable position in terms of utility companies and carbon footprint. Of course, what's really exciting about this company is the growing profit and dividends. Vista delivers on both counts. Earnings per share has almost doubled over the last decade, up from $1.65 to $2.97 between fiscal year 2010 and fiscal year 2019. However, fiscal year 2019 GAAP earnings per share was positively impacted by a termination fee from Hydro One. Still, Vista shows slow, steady growth. Meantime, Vista has increased its dividend for 18 consecutive years. The 10-year dividend growth rate is 6.7%. which is awfully nice when the stock already yields 4.6% as of the time of this video. That yield is significantly higher than the stock's own 5-year average yield of 3.3%. The stock is trading hands for under $36 a share. It's about 10% above the 52-week low of $32.09. Furthermore, it's much lower than the 52-week high of $53. The price-to-earnings ratio is just over 18, which is not bad at all for a quality utility yielding over 4.5%. For comparison, the stock's 5-year average PE ratio is 21.2. The payout ratio at 84% is a tad high. Otherwise, the dividend metrics are great. I originally bought stock in Vista in 2012 for under $25 a share. Then I sold those shares for over $50 a share in mid-2017 after it was announced that Vista was being acquired by Canadian utility Hydro One. However, that deal later fell through, and I recently decided to buy back into Vista after the stock cratered from the shock of the canceled deal. The second stock I want to highlight is Black Hills Corp, stock ticker BKH. With roots dating back to 1883, they now provide energy to approximately 1.3 million natural gas and electricity customers in 8 states: Arkansas, Colorado, Iowa, Kansas, Montana, Nebraska, South Dakota, and Wyoming. Black Hills doesn't have the hydro assets that Vista has. However, 86% of fiscal year 2019 total revenues related to renewables, natural gas, and other services. And they've achieved a 16% CO2 reduction since 2005. Surprisingly, this utility stock flies way under the radar, but I'll tell you why it shouldn't. Growth has been slow and steady, just like we see with a Vista. Earnings per share climbed from $1.76 to $3.28 between fiscal year 2010 and fiscal year 2019. Good stuff, but what's really impressive here is the dividend growth. They've astoundingly increased their dividend for 49 consecutive years. That's only 1 year away from becoming a dividend king, which means 50 or more consecutive years of dividend raises. I don't know of an electricity utility with a longer dividend growth track record than this. The 10-year dividend growth rate is only 3.7%, but there's been some dividend growth acceleration here. For perspective, the 3-year dividend growth rate is 6.9%. That's what you want to see. This growth comes on top of a 3.9% yield. By the way, that's almost 100 basis points higher than the stock's 5-year average yield. And with a payout ratio of approximately 70%, it's highly likely that Black Hills will continue growing their dividend for years to come. As I shoot this video, the stock is priced under $56 a share. But check this out, the 52-week high for this stock is $87.12. We're not even close to that. With a price-to-earnings ratio of just over 18, the valuation looks pretty attractive. Every basic valuation metric you can throw at this stock is lower than its respective recent historical average, and the stock is obviously priced much lower than the broader market. I recently initiated a position in this stock. I've been wanting to invest in Black Hills for years. I finally saw an opportunity and took advantage. You might want to do the same.
Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including a link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over on Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is and am often invested in the same stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from the same exact stocks that I own. If you think this is something that you could benefit from as well, check the description below, see my portfolio, and start getting my stock trade alerts. I'll see you next time.